What's up, guys? We are here again on Teach Me Tuesday. Let's go.
We live again, baby.
Live again, live again. I
Staying
got the
consistent.
Abrahams with me from Guild Mortgage. And if you don't know, my name is Wilmot Berry with the Berry Group, brokered by EXP Realty. And we're doing Teach Me Tuesday. And how you guys doing, the Abrahams?
We are good. Well, I'm good. Gavin, how are you? I'm doing good.
Golden, great.
Great,
Beautiful
great.
day in the neighborhood.
Oh man. Hey, I'm feeling pretty good, man. Hey, I just celebrated 10 years of marriage
Woo,
and
woo, woo.
to my beautiful wife, Dr. Jessica Berry. And we
Stop.
went had a great time this weekend, man. So I feel pretty relaxed and ready to go sell some more houses.
There
So
you go.
uh
That's all it takes is a little celebration to get your mind right.
yeah, it was needed and glad we got we're able to do that. But here we go, guys. Let's get right into it.
Mhm.
We're going to talk about this week. We're going to talk about interest rates, guys. We get questions all the time as realtors, as mortgage professionals about interest rates. So I'm gonna let the professionals go ahead and give a good start to this interesting discussion about interest rates because they have been fluctuating a lot within the last couple months, year. So if y'all can just touch on interest rates, and I'm gonna just follow up with you guys.
Okay. Well, I mean, I'll start off before I let the guru get behind me on this. But I mean, I guess really most importantly, everybody want to know what today's interest rates are in a sense, like what interest rate applies to me. And it's a question with layers, right? Or it's an
Mhm.
answer with layers. Um, there really is no par interest rate at this time. You have more of a range. So right now rates are as low as let's say 6%, and then they range as high as 7.5% in today's market. Now that varies, of course, by different factors, different variations of credit scores, loan programs, um, and and down payment, things of that sort. So it can vary, guys. There's no one answer to tell you that hey, rates are 6% today, or rates are 6.5%. Now I can tell you that for certain programs, and we've talked about various down payment assistance programs like state housing. They provide a par rate that's for everybody every day,
Mm.
based on which program you want to go with or you want to use. So it doesn't matter where your credit falls, so long as it's an eligible credit score, and you meet the income requirements. That same rate is for everybody who applies. Um, yeah. So, Lashawn, would you like to add and kind of tell them like what different things affect? Well, like what are some main factors of the credit score?
Yeah, so what I would add to that, so pretty much what I'm hearing, Gavin, is what you're saying is that I get, like I said, we get these questions a lot. A person will call in and be like, I want to buy a house. What's your rate? Honestly, I don't like that question when someone asks me
Mm.
that because any lender that will tell like that will spit out a rate, they're just
Mm.
giving you a generalized rate. But even though they're giving you like a generalized rate, that's not necessarily the rate that's like applicable to you, right?
Okay.
Because
Mm.
as Gavin just said, depending on the loan program, depending on your credit score, depending on how much money you're putting down, your rate may or may not be that because
Mm.
there's something called in our world is called loan level price adjustments. And so there's different variations that can constitute what kind of rate you get. And so when you're calling around or you're shopping, for the best rate, you need to make sure you're really comparing apples to apples because I might say, oh, yeah, our rate is 6%, and that could be on an FHA loan, but you may
Mm.
want a conventional loan or you may
Mm.
want a VA loan. You know what I mean?
Mm.
So if you're not specifically asking for, those certain parameters, then someone can say a rate, but you can't really take that rate to the bank.
Okay. Well, let me go right there. Then you said you got conventional loans, FHA loans, USDA loans, right? So are interest rates lower for certain loans or higher for certain loans? Can you go into that?
Yeah, so that's a really good point you're making there. They are. So, as you mentioned, with USDA, FHA, and VA, those are all considered government loans. And
Mm.
so, government loans are backed by the federal government. So, those rates tend to be lower than your
Mm.
standard conventional loans. So, yes.
Oh, okay.
Mhm.
Oh, okay. All right.
Yeah.
You about to say?
And just to add to that, I mean, guys, so I think the myth or the misunderstanding behind interest rates, it's you have interest rates. It can be 6, 5, 7.5. That is your interest rate. But what you're concerned about, or what is behind that, is the pricing. Right now, unless it's a set program, really, if you're going conventional or FHA, you're going to pay a price for your interest rate. Um, and
Now you're getting real technical,
now,
Gavin.
I don't want to
You
get too
Now,
getting
technical.
good
hold on.
now.
What? So let's back this back now. What do you mean by price if you're going to go there?
Right. So we're going to take it there. Interest rates
Okay.
aren't free. For you to get an interest rate, um, for your
It costs
loan,
to be the boss, Gavin.
it
You
costs
want
me
that
the
low
cost.
interest rate?
Now, not to say you're going to spend a large amount of money. I mean, you can, depending on some of the factors that affect the rate that you're going to get. Some of the factors that affect the rate is your credit score. If you have a credit score, normally we want to get everybody to a 620 or higher, because pricing is better when you're on that end of the scale. The higher your interest rate, the higher your credit score, the better pricing you're going to get on the interest rate. In most cases, for most loan programs. However, if you're on the low end of the spectrum, let's say you're at we qualify you as low as a 540. If that's where you're at, you're gonna pay a pretty penny for your interest rate.
You said 540, Gavin.
We qualify you as low as 540. Now,
Woo.
I
Now
don't.
put the disclaimers in
I'm
there.
gonna
What
put
you got to
disclaimer around
have
that.
at a
Now,
540?
Hey, you're gonna get a
you need
lot of
some money.
realtors sending you people in a little bit, boy.
Yeah, you need some money. You're gonna have to put down a larger down payment, at minimum 10%.
Okay.
But yeah, 540, 580, you're putting down at least 10%.
So I would add to that, right? So what you're
Mhm.
talking about when it comes to pricing, that's called points. So the technical term is called points. So if you see that rates like your credit score are lower, then you have these points or whatever that's associated with it. So the points kind of equal the price. So the lower the credit score, the more points it's going to cost. Which the more points it costs, then the higher your closing costs are, essentially. So a person with a lower credit score will pay more money.
Okay. Now that makes sense. I was like, man, 540. Woo. Hey. And I see EJ commented 540. Yeah, that's that's
that's up.
Don't
Worry, brother. I know you ain't at no 540. We talk later. It's 700.
But yeah, man. So that's good to know. Like, there are options for people out there that might not have the best credit, but it could come at a cost with the interest rates, right? And that's good to know that your conventional loans could possibly have higher interest rates than your government loans. Correct.
Mm-hmm.
Okay. So normally, as a realtor, when I'm dealing with people, what the biggest thing is: how much is my monthly payment going to be? So and interest rates are key when it comes to your monthly payment.
Say that again. I like
interest rates are key when it comes to your monthly payment. So sometimes, I know I can kind of give a general, some people say how much this might be a month. I can kind of give a general idea, but you really don't know until you know what your interest rate is going to be.
Correct.
All right.
Correct. So let's unpack that, what you just said, right? So let's say we're in 2023, right? On average, Equity Tuesday. What is that?
It's coming.
It's coming, EJ. It's coming.
It's coming, big dog.
So let's say, for example, in 2023, let's say rates are at 6%, right? Last year, even the year before, 22, 21, rates were probably 3 and 4%. So
Woo.
let's just see the difference between if the rate was 4% versus today, the rate at 6%. So
Mhm.
on $250,000, when rates were 4% a few years ago, right? And I'm just going to give principal and interest just for easy math. The principal and interest payment on 250,000 at 4% was about $1,200 rounded.
Mm.
Today, if you get in a 6% rate, that the difference is $1,500. So by the rates going up 2 points from 4% to 6%,
Mm.
that mortgage payment has went up almost $300.
And that's just principal and interest.
Correct.
Right.
That's not your insurance, guys. You know what I'm
Like
saying? That's
taxes,
not your taxes.
property taxes.
You know, so let's. I want to make that clear because I get a lot of people. They go on Zillow. They see
Oh
that
yeah.
that monthly payment. Well, I can buy this.
Yeah.
Well, that's with 20% down.
Hmm.
No PMI. You know, that's with a lot of different factors. So I'm glad we're kind of going over this because I feel like a lot of people don't understand, that how important interest rates are right now. So, hey guys, so I get this question a lot too. I'm going in. We're gonna go in today.
Hmm.
So, should I wait until interest rates go down before I buy a house?
Mm.
Some people want the answer sugar coated, but we ain't doing that. No, the answer is no. No. You listen, guys. You made the I guess myth that interest rates are high, 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 high. Truthfully, they're not. They're
Mm.
higher than they were 2.5 years ago.
Mm-hmm.
But
Mm-hmm.
and yes, we were spoiled, absolutely spoiled by
Mm.
2%, 3% interest rates. That was an
Sleeping.
anomaly. That was a 20, 30, 40 year anomaly that happened.
Sleeping on interest rates.
Right.
Mm.
And
Interest rates are so
now
good.
the market is pretty much, I guess, leveling itself or normalizing itself back to where a typical interest rate, mortgage interest rate should be. I mean, not to say that it's fixed that in this market right now. Yes, it's going to be a trend. It's going to go up. It's going to go down over a set amount of time, and there, like I said, the different factors that go into that. But we anticipate to see rates slowly go down again in the
Mm-hmm.
coming years. Now, can I?
But when you say slowly go down, like you
Mhm,
said before, they're not going to go down to a 2 and 3%.
3%? No.
I mean, going down would maybe mean high fours, fives, but you're not going to ever see 2 and 3% on a 30-year fixed loan.
Mm.
That's
Right.
highly
So with that said, while you're waiting for that 1% drop, how much equity are you building in the rent that you're paying for those years or 2 years that you're waiting on an interest rate?
That's good.
You're not
That's
building
good.
no equity. You're not putting no money in it. You just you paying somebody else's mortgage when you could be focused on. And again, renting is not a bad thing. It is for some people, and
Mm-hmm.
there is for certain situations. But
Mm-hmm.
if your mindset is that I don't want to purchase right now because of I hear that the interest rate should go down at some point, or in my mind I have it made up that, oh, the interest rate's too high for me to buy right now, then that's just in your head. That is a myth. People who are buying right now are building equity and changing generational wealth in their families, and I don't want you to miss out on that. So
Mm-hmm. Yeah,
okay.
man. I'm gonna say this, LaShawn, before
Mhm.
if you don't mind. So guys, I get it. You know, when you see where they were and where they are, you kind of like, man, I missed out,
all right.
right? You know, but let me say this too about houses. If you find a house that you love,
Mhm.
it's not gonna be there a year from now. I'm gonna say that. I'm gonna say that one more time. In if you find a house you love, that house is a great possibility that it will not be there if you just waiting on interest rates to drop. Okay.
Mhm.
So you look at it from that standpoint too. Man, this y'all been searching and looking, and this fits all of the criteria that you need, but you thinking about the interest rate. You can, if the interest rates go down, what can you do? You can always refinance, right?
Mhm.
Exactly. Depending on the situation. Let me
Mhm.
clarify that. Depending on, like, I've heard, we learned that if you have a certain, if you get U.S. housing, SE
Right.
housing,
Mhm.
and you have the down payment program,
Mhm.
and hey, make sure you speak with your
Your
lender,
mortgage
your mortgage
professional, right?
professional, about being able to refinance later,
Mhm.
because you might not be able to because of that program. Okay,
Yeah.
but
Mhm.
go ahead, go
No, no,
ahead.
I was gonna say it's not that they wouldn't be able to refinance. It's that
Mm-hmm.
with certain, if we're talking specifically about state housing and their
Stay
down payment
housing.
assistance programs,
Mm-hmm.
um, those are forgivable. They're still that money that you're getting is a forgivable loan, and
Mm-hmm.
you have to meet certain terms for it to be forgiven. And part of that is years that home being as your primary resident for a certain amount of years. So
Mm-hmm.
if you go to refinance before that term, then yes, that money is due. And again, it's not a scary thing per se. It's just something that you will need to take into consideration because most times when you're going to make a change, whether it's refinancing and you're doing a cash out or it's selling that home prior to that period being over, guys, it's not anything that's necessarily you're paying out of your pocket. By that time, you will have built enough equity in your home to where that money, that $8,000, let's call it, for the down payment assistance, is just going to be absorbed out of um, your proceeds. So whatever you were supposed to get back, now you just got to remember, okay, well, I did get $8,000 up front.
Mm-hmm.
I didn't complete the terms of the forgiveness period, so now I just have to pay that $8,000. That $8,000 is going to come out of the money that I was going to make on the sale of my home or on the cash out refinance.
Mm-hmm.
So
Yeah, and I would add to that too, Gavin, is that what people need to make sure they understand with refinancing, and I make sure that I truly stress this to buyers,
Yeah.
is that if you're going to buy now and with the hopes of refinancing, you still have to qualify to refinance,
right.
right?
Mm-hmm.
And so refinancing, what that means is that you are reapplying for a mortgage, meaning that you still got to have the credit, you still got to have the job, you can't have like missed mortgage payments and things like that, you so that you can be eligible to refinance.
Right.
That's good.
And so what which we haven't really ran across a lot, um, just simply because those who brought at the 2 and 3% interest rate in 2020. But let's say you come around and you want to refinance now because your equity in your home over the last 2 3 years is just skyrocketed. I mean, we're talking about people who got 15 to 20% of equity in just a matter of a year in their home just because of what the market did. That's kind of stabilizing out to where it's a gradual increase here, But now when they come to refinance, let's say you brought your home for only 150,000 or 200,000, and you come out to do a cash out refinance, your home is now worth 350, 400,000. You only qualify for 150 when you originally got your loan.
Mm-hmm.
So don't expect now that, oh, well, I'm gonna take out the max that I can. I'm gonna take out 80% of the equity. So I'm gonna take it on a $400,000. If your home appraises for 400,000, I'm gonna take out $300,000. I'm gonna pay off. You got to qualify now to take out $300,000 loan.
Mm-hmm.
And if you only qualified for 150 just 2 years ago, unless you had a big financial change to where you got a second job that pays just as much as your first job, or
Mm-hmm.
you got a major salary increase or something, you're not going to be eligible to do so.
Mm-hmm.
You're not going to qualify.
Wow.
So yeah.
So one of the things I thought about when you were talking, Gavin, is that, what are the impacts, right, of interest rates on a person's buying power? Okay. Can y'all go a little bit into that? Because I've seen people a year ago have a certain buying power, and now they have a different buying power. Can y'all talk about that a little bit?
Yeah, so just in that example that I kind of mentioned before, when rates were 4%, versus
Mm,
rates being 6%. We went from at 250,000, that payment being 1,200 versus 1,500. So let's just reverse that back. You know what I mean? If you
mm,
qualified for 250 at that particular rate, and now that rates are higher, you're going to qualify for a $300 less of a payment. So instead
mm,
of a $1,200 mortgage, you're down to 900. You know what I mean?
mm,
And
mm,
so in terms of a mortgage, that went from qualifying from what 250,000 to you probably somewhere in the
Close to
in
the
the
200.
like 150. You know what I mean? So that's bringing your buying power down almost $100,000 because now the rates are higher, your payment is higher, so
mm-hmm.
the ability for what you can afford is have decreased.
Yeah,
Mhm.
yeah. So that's been the negative effect, I will say, guys.
Hmm.
Just keeping it real.
Right.
I've noticed people's buying power decrease because of the increase in interest rates.
Mhm.
Okay. When you could have bought a $300,000 house, now you only qualify to purchase a $200,000 house.
Hmm.
That's a different type of house,
Right.
you know, and it's harder, especially if you got people trying to purchase homes sub 170,000 dollars, and they're trying to make those payments work, but due to interest rates, we got to find housing for those people, um, that pretty much, are saying like, man, I can't have a payment higher than $1,000 a month,
Mhm.
you know.
Yeah. Ooh.
So that's the crunch. That's the crunch. That's the challenge as realtors, that we got to find housing. And I'm about to go on a little tangent, but I'm gonna warn you before. That's why I'm so passionate about Orangeburg, like developing and making sure we have affordable housing for people. You
Mhm.
know, I see a lot of people, contractors out here building 300, $400,000, and in Somerville and in parts of Columbia, that's fine, you know. But in Orangeburg, I feel like, man, we need more affordable housing,
Mhm.
to fit the Orangeburg client, you know, because there's a lot of people out there that want to be homeowners, but there's not enough homes out there that's affordable, for the Orangeburg
Yeah.
person.
Yeah.
Yeah,
And so I
man.
would add to that, Wilmot, that's everywhere. I mean, I think
Gotcha.
for sure it's in Orangeburg, but it's
Hmm.
also here as well. Even though
Yeah,
our price points are a little higher, and it could be the same, in other parts of it's a nationwide
yeah, it is.
dilemma. I literally just left a meeting where we was talking about this exact same topic.
Wow.
And so I encourage people to get involved with their local government, get involved with, these policymakers, your mayors, so that you can have a voice towards what's going on. Because the difficult part is
Hmm.
it's not going
Hmm.
to change because there's demand. And so go
You're
ahead.
so good. You hitting it. You hitting it right now because,
Yeah,
like,
literally, when I say the papers are
yeah,
literally like
because
these are
so
you can see my little thing here. It says the facts,
wow, wow,
attainable housing, because there was a whole meeting about it because
yeah,
we're running into these problems, and myself as a lender, and I know you as a realtor, these are the clients that we serve. You
yeah.
know what I mean? Like I sit in front of these people every single day who make less than $50,000 and they cannot buy a house.
Hmm.
They can't.
Hmm. Hmm.
So what are we going to do? But you got people moving here from New York, California, even people in your area. Where so many people that's from Charleston or Somerville is moving to Orangeburg because
Mhm.
Orangeburg is more affordable.
That's right.
You know what I mean? And the people who are from Orangeburg are going to get kicked out because it's a ripple effect.
Yeah, and I'm a so while I'm on this, and people that are listening that are in Orangeburg, so typically the first Wednesday of every month, the planning commission has the meetings on the first Wednesday of each month. So tomorrow, which is the first Wednesday, right? Yeah.
Mhm.
So tomorrow we're gonna have a meeting,
No, right.
and a lot of changes are being talked about at these meetings, and you know I want to invite you know people that live in Orangeburg that want to see more development, that want to see, more things change in the area of Orangeburg to come out, because there are people that's coming, but a lot of times those people don't want to see change. Okay. So I'm gonna just leave it like that. A lot of
Right.
times they don't want to see change, and they're stopping development, they're pausing it. But for my kids, for my family, and I get it, change does come with challenges. But I want uh you know our younger, when I say younger generation, my age, if you're in your 30s, your 40s, your 20s, and you live in Orangeburg, come out, because a lot of decisions that are being made by people that just don't want to see change. Okay.
Right. And
What I
who also don't understand, from an economic scale of what affordable is
Mm,
for the
yeah.
either the minority and sometimes the majority. I mean, the
Mm-hmm.
majority, if I'm not mistaken, Orangeburg County is the minority, per
It
se.
is.
Um, so but you don't have, I'm not saying it's concrete, but you don't have that representation up there, in the seats of power, making
Mm,
decisions on our behalf.
mm-hmm.
So
Mm-hmm.
one thing I'm going to add to that, and because I just like to be real, because that's just who I am. And so yes, it is up to us to be there to voice our needs and our concerns. But I
Mm-hmm.
like to deal with things on both sides, right?
Yeah.
Us as a people, we have to also position ourselves better financially, right?
Mhm.
Knowledge is power, right? That's my thing, but it's also power if it's applied. And when I say if it's applied, if we have the knowledge that rates if we have the knowledge that rates are higher, if we have the knowledge that the prices of houses are higher, right? What are we going to do about it, right? Change takes time, right? But in the
Mm-hmm.
meantime, while we're waiting for that change to come, what can we do as an individual who wants to buy a house? Work on your
Right.
credit, look at your finances, right?
Right.
Reduce your debt so that when these things happen and these opportunities come there, behind the eight ball, trying to now fix your credit, now house, right? So we have to do our part, because if they make the house prices affordable, you still got to be
Mm-hmm.
eligible to buy a house,
You're right.
and you
You're
still
right.
have to make sure that you're going to be in that number.
Exactly. You're right.
That's my 2
You still
cents.
gotta have your stuff together. No matter how much we talk about what we want and everything, you gotta apply, so that you can qualify for a house. So I totally agree with you. And I think that, us having this discussion every week,
Mhm.
and when we have our Teach Me Tuesdays, to be able to educate the people on how to better themselves and apply it, guys, or just reach out to one of us,
Mhm.
so that we can help you. Don't think you too far gone. You
Yeah.
know,
Never.
yeah, you don't think that. I mean, you're only too far gone if you don't try, you know,
That's
or
right.
seek out help. So you got to start from somewhere. Why not start now? Reach out to the Abrahams if you need any mortgage services, or if you ready, man. If you reach out to them, they say, "Hey, I got my pre-approval, man. Call me." All right, and I'll be more than happy to help you find you a home in Orangeburg and try to or surrounding areas, so that
Anywhere
we
in South Carolina.
anywhere
That's right.
anywhere we can
And
help
I'm
make it
licensed in
happen.
Georgia, so South
Yeah.
Carolina.
Yeah, yeah, that too,
Yeah.
there too.
Yeah. Before we
Um,
close out, um, I know we're taking a step back, but where we at right now with interest rates and home pricing, right? The prices of homes and the we just happen to come into a perfect storm, to where there's been a mix of home prices skyrocketing and interest rates going up. So, because most times, an interest rate going up doesn't heavily affect the market the way it is right now.
Mm.
Because again, it's somewhat easy, like LaShawn was saying, the homes that were at the 150s or 200, you used to can find a very good starter home or whatever here in the Charlottesville. When we bought our first home, this was like 10 years ago, or a little bit earlier, we brought our first home in like 125, and that was
Mm.
a three bedroom, two bath, 1,300 square foot house. That house today will cost you like
300.
250 to like, I think our old house is on the market now for like 260 or something like that,
Mm.
which is crazy. That's 100% more equity than what we purchased at. So that's what's making it also a lot more difficult for people to qualify, because of course we know that people's income didn't increase by that much. So it's it was a perfect storm, and now that storm is balancing out, when it comes to interest rates, and it's not going anywhere. Home prices are not about to skyrocket. I mean, about to drop, significantly here in the coming years. But home prices are where they are. So, guys, you got to make a decision now to get qualified, get in, and start building wealth.
Yeah. Yeah, man.
Yeah.
Um. Yeah.
He's gonna
So
say
so
something.
so guys, you got something you want to say, LaShawn, before we
Yeah, the
end?
last thing I was just going to add to that is that you have to really think about your why. You know what I mean? Why do you want to own a house? Is
Mm.
it just because you need a place to stay, or is it
Mm.
bigger than that? And I'm hoping the answer is that it's bigger than that.
Yeah,
You know what I
man.
mean? Because as you said, Wilmot, this is generational wealth.
Mm.
This is how you truly start building wealth, is by
Mm.
homeownership.
Yeah.
So doing the things that are necessary to make that happen, I mean, it's a no-brainer to me.
Yeah, man. Real estate. And you can ask people that know me. Like, you asked me 5 years ago if I was gonna go into real estate. I probably would have told you heck no. I'm just gonna
Right
be
on.
honest with you. But I'm so thankful God kind of led me this way. Because I'm seeing wealth transfer
Mhm.
on a transactional basis. Like I'm seeing checks I've never seen before, six-figure checks being given to the owner, you
Mhm.
know. And but then you're seeing families purchasing homes now. Now the ball is in their court, you know. And them, continue to build equity in their property. And then at some point, maybe selling that property and then seeing that nest egg there, to have to maybe put on a new home or to invest in something else. So, but yeah, guys, it was a pleasure this week
Oh yeah.
again. Um, Always enjoy these sessions, man, because I know we're giving. And if you guys have anybody out there listening, if you have any topics that you want us to cover, any questions, please let us know. We'd be more than happy to kind of do a Teach Me Tuesday dedicated to it, or just a portion of the session dedicated to it.
All right.
Or if it's a private question, just reach out to us. We'd be more than happy to help. Um, all right. Well, guys, it was good again.
Yes, sir.
Yes. We'll be
Until
back
next Tuesday.
Next Tuesday. All right. Y'all have a good one.
All right.